What is up, everyone? Good morning. Hope you're all doing well. And we got another update here. It is Tuesday, February 11th, and we have some downside created on the overnight session. Nothing too crazy after yesterday's failed move post tariffs, right? We're expecting some more tariff news as we have Jerome Powell coming on the wire to testify today, as well as some Fed speakers riddled throughout the week. And then tomorrow morning, what we have is the CPI data. Right now, yesterday's movement seemed very, very slow and coiling. That might present the opportunity for some kind of larger, more, I guess, expansive move on today's session or going into tomorrow's session based on that CPI data. So a lot to consider here, and overall it seems that the implementation of tariffs that has been going on has taken the market by somewhat of a bullish surprise, right? Initially we do have a large drop-off, but the S&P closed slightly up yesterday after levies were leveled on imported steel and aluminum, while the benchmark index is also up 1.2% since Chinese tariffs were signed on February 4th. And the truth is that these aren't as broad-based or economically interconnected as ones threatened against the Canada and Mexico, but it also might outline the inverse adage that traders could apply in the Trump era 2.0. Sell the rumor and buy the news. Generally, it's the other way around. But what we've seen so far is multiple threats of tariffs have caused initial downside in the markets only to be rebid back up aggressively. This seems more of a ploy from very large participants to get better prices after an unwind post-news. So the main fear here is that the prices will increase for the American consumer if companies pass on the added costs of tariffs. However, while the two are strongly intertwined, the stock market is not the economy in some sense, right? But yeah, realistically, if some price tags increase, corporations will still maintain their margins and earnings growth as long as the consumer keeps buying. Now, as it stands, robust consumer spending in the U.S. has kept up in the past years, even during periods of elevated inflation that we saw over the past few years, helping the U.S. achieve a soft landing, quote unquote, right? I think we might be speaking too soon the way that things are going. Now, again, these aren't the sweeping tariffs that were initially threatened, which could impact consumer spending and corporate profits, but those two should be assessed pragmatically. Next up appear to be the tariffs on the European Union, as well as what we call reciprocal tariffs that we touched on yesterday on every trading partner of the U.S. And are those the heavily interconnected type, more targeted, or merely threats to ink a new deal? Now, it's like, realistically, you got to think of like what the end goal here is. The end goal isn't necessarily to just like bloody everything up within the U.S. and everywhere else. It's to strengthen the U.S. and hold up like the economy and the market. So if there could be an attractive deal that kind of flatlines that, then that's most likely going to be the course of action. So as investors decide, there has been a series of other trades being closely tracked by the markets aside from stocks. Gold has been on a complete tear over the past month due to the safe haven demand and just topped the 2,900 level for the first time. Industrial metals like copper and aluminum as well as steel are also getting some love amid the rush to secure supplies as tariff uncertainty reigns supreme overall. And we're pretty freaking close to 3,000 gold per ounce based on where its current levels are. Realistically, I think that that's achievable and more if we do see some significant pullbacks here. How significant? They don't have to be like drastic, but the expectation is for a continuation in gold this year along with precious metals. We also have some news that Super microcomputer is up about 50% heading into earnings. McDonald's held out pretty well. MicroStrategy or Strategy MSTR continues Bitcoin buying binge. And today we've got Fed's Hammock, this is the first time I've seen that name for a Fed speaker, spoke this morning. We have Jerome Powell's speech at 10 a.m. Eastern, so I think all eyes are going to be on that. I think generally subdued movement until Jay Powell comes on the wire. We have two more Fed speakers into the end of the day at 3:30 p.m. Eastern. Both Williams and Bowman are expected on the wire. So we'll see how that shapes up with these Fed speakers coming through, but it's going to be a thicker news day from start to finish. And based on yesterday's kind of slow, dead movement, there is some expectations that we'll see a little more volatility and larger moves in this market overall throughout the day, with the expectancy of decent swings. So especially when we're looking at the S&P here, I'm a little spooked about the potential of a move under the 60-70 area. This was a very strong pivot for us yesterday, even like going into last week, is the start of this decent little distribution that we got going on. And currently prices are lingering below it, not too drastically. It's not like a massive expansion lower. But right now, realistically, that's going to be the pivot. If we continuously fail from that area, we have very, very weak volume, unfinished auction that had been left behind on Sunday by those buyers. So if we tackle under that mid 60, it's a pretty easy sweep down into 60-30 and then even into the 60-10s on the S&P 500 based on the very limited volume that we saw on Sunday's rebound on the overnight session. So realistically, if we can't hold a strong bid above 60-70, we're most likely going to see an adventure to the downside, and a swift one at that. Now, keep in mind, with all this news coming out today and tomorrow, markets can get a little wonky, and you want to be prepared for situations like that. So as I get ready for this morning session, the only area I'm interested in is around 60-70 on the SPOOs. Whether we're above or whether we're below, that's what's going to dictate the directional stance that I want to take. And I'll give it the first, even if I have to, 30 minutes off the market open to get a better understanding of who's in control of the information. And, right, keeping in mind that after those 30 minutes after the market open, Jerome Powell comes on the wire, which could shake things up even more than we expect. So keep that in mind and stay cautious today. I think there can be opportunity, but let things kind of settle down before you start jumping in left and right to chase movement per se. I think very volatile days, a lot of people tend to avoid them, but I think that the more calm you remain and you're trying to decipher what's going on based on the areas that you care most about, the easier it might seem, rather than getting trapped up in all this movement and going up when it goes down, going left when it goes right, and getting mixed up a lot. So I'll leave you guys with that. I hope everyone has a fantastic Tuesday, and we'll do it again tomorrow. We'll see what the CPI numbers bring out, and I'll see you guys at community.tradeproacademy.com. Check us out in our open Discord, and we'll chat soon. Take care, everyone. Have a great day.